Brad Thomas here today with The Street here at ReCon Las Vegas 2013. I'm honored here today to have Bobby Taubman, the CEO and Chairman of Taubman Centers. Good to see you today.
Well, we're delighted to have you here, Brad. Thank you.
Great, absolutely, and it's great to be here with a blue chip REIT. You know, I talk a lot about blue chip REITs, but this is absolutely, Taubman is a blue chip REIT. I want to talk about, first of all, your capital. Your balance sheet, very strong balance sheet. You know, how are you doing that today? How's the capital markets working for your company?
Well, we're delighted, obviously, with how open they are to us. The markets are so buoyant right now. There's some guy in Washington that's buying $85 billion a month, and he's helping all of us. And he's been a great partner for all of us. But capital's very available. We extended our credit line. We have a $1.1 billion credit line that is on an accordion up to $1.5 billion. It's basically very little, but it is being used at this point. So we have lots of capacity. The long-term lenders like life companies and the like, pension funds, are very interested in our asset base. So we have lots of capital available for the opportunities that we see. We have very low debt to market cap. Our coverage ratios are very strong. We operate the company as if it were investment grade. We are not a rated business.
Right.
We typically do secured asset lending, but we're very proud of our balance sheet. It's taken us a long time to get to this point, and we're going to jealously guard it and think it's a very important competitive advantage to be able to have a balance sheet like this. So as you see an opportunity, you can act very quickly. At year end, we bought parts of 2 assets that we already own, International Plaza in Tampa, as well as Waterside down in Naples. Those decisions were made in a couple of weeks, and closure was right then.
Right.
So,
well, blue chip REIT again. You've got a lot of blue chip tenants. I've seen a lot of those around here at the show today. Tell us about your portfolio. I know you've got some very high quality tenants in your portfolio. Like who?
Well, tenants are really attracted to sales productivity. And we've had records for the industry very continually, quarter after quarter, for many years. Our sales are now running at almost $700 a square foot for the portfolio, which is not quite double what the average for the industry is, but it's a tremendous difference. And when you talk about that kind of increase in productivity, tenants are really actively trying to campaign for good locations in our shopping centers. So we have a higher proportion of what's called the better to luxury group, but really when you look at the spread of most of our assets, they're upper moderate, better, and then luxury. And you have tenants that run the gamut from a Gap, an Abercrombie, up to a Louis Vuitton, a Chanel, and Hermes in certain of our properties. So we really do have tremendous demand. All the metrics in our business, all the fundamentals look very, very strong in our core. Again, sales are way up. Occupancies are near all-time highs, if not at all-time highs. Lease space is there. The average rent growth, the spreads on new rents, total occupancy costs, all these metrics are terrific.
Sure, and in terms of external management, I know you've been very active in development today. You've got outlet product underway, under construction, I think going to deliver later this summer. Also some international growth. So tell us about your external growth today.
Well, our external growth is principally development. We also do acquisitions. I mentioned the 2 that we did at year end of 12. But when you look at our growth through development, which is really, we've been a developer, our DNA is about development, and we've been very fortunate to be very successful in a broad sense in the developments that we've done over the last 20 years as a public company. But today, we have, for our share, we've announced $1.2 billion of development, roughly 10-11% of our asset base. It's comprised of new regional mall development in Sarasota, a new regional mall development in San Juan, Puerto Rico, the outlet that you mentioned, Chesterfield outside St. Louis, and then we have 3 projects in Asia that we've announced, 2 that are in construction, one in Xi'an, which is in central West China, one in Zhengzhou, which again is in Central East. These are huge second-tier cities with almost 9 million people in them today. Excellent projects with very good partners. Wafujing is our partner that is also the anchor story in each development. And then in Seoul, and both of those projects are under construction, and then in Seoul, Korea, we have a development with Shinsegae, who's the largest retailer, is our partner in Korea, in a city called Hanam, which is east of Seoul. So those 3 projects, the 3 that I mentioned here, and we hope that we have a new one coming here in Hawaii that we've been working on for a long time. We're hoping the next period of time to be able to formally announce that we're going forward with that project as well. So, we have tremendous value that we believe that we're building, tremendous NAV that over the next several years will come into our company.
Great. Well, Taubman is certainly a great way for the average investor to invest in very high quality real estate, and is certainly glad to have a high quality CEO here with us today.